China's economy, the second biggest in the world, has slowed again. The growth rate declined to 7.5% for the 3 months ending in June, a slight fall from the previous quarter. It keeps China on course for the government's 7.5% target for the whole of 2013, but that would be the slowest growth in 23 years.
That was down from 7.7% during the first quarter of the year. The officials say the rise of the Chinese currency, the yuan, caused a slowdown in exports.
After analysts predicted a rise of 4%. The Chinese government expects 7.5% growth for 2013, an impressive figure as major economies face a downturn. Still, it's the slowest pace of growth seen in China for 23 years. The economy has now slowed down in 9 of the last 10 months. The concern for the Chinese government is a rise in unemployment, which could spark social unrest. So far, the government says employment is stable.
The fact, if you look at the way that the markets are reacting, as well as the statements made by government officials in the days leading up to this announcement of a 7.5% GDP growth rate, that, that things are changing in China. The days of double-digit growth, they say, are over. It's also in line with the strategy that Li Keqiang, the newish premier here in China, is trying to revamp the world's second largest economy, move it away from a gross export, kind of investment-driven, credit-driven, to a more sustainable, normalized economy. So right now, the sense is this is in line with expectations. The worry is as if this either has a hard landing at some point, or whether it kind of develops into a more on-the-ground situation with depressed job numbers as well as social unrest as people see this charging economy slow down.
It's important to stress, of course, that China's economy is still motoring along by Western standards. But the point is that growth rate is slowing. Long gone are the days of double-digit economic expansion. And these closed-down shops and boarded-up businesses may be, for now, simply the symptoms of a particular problem in one particular industry, but they are also, perhaps, the first glimmer of the pain that some of that slowing growth may cause.